Welcome to Tradiers, the Trader's Edge. I am Jim Iuorio. That's my trusted sidekick, the Robin to my Batman, Iaccino. By the only reason I said that is because you looked like you hadn't had the right amount of caffeine, so I needed to piss you off in some way. Okay.
You pissed me off. You did it.
Good. And now you're awake.
Congratulations.
How about thank you? How about thank you? Anyway.
Thank you very much. I appreciate it.
Please join us also at unfilteredinvestor.com, where we take some of the things we talk about on the Tradier Hub and break it down into actionable, tradable things, even more so than we do on the show. Bobby, something scary as shit happened. We need to talk about Monday on our other show. You said you went on to AI to get some clarification on what Powell said about stopping the runoff of his balance sheet, what he said on the 14th. And AI answered by saying at the October 29th FOMC meeting, Jay Powell announced this, by the way, this is October 27th, people. October 29th, Jay Powell said that starting December 1st, that they will be reinvesting proceeds, yada, yada, whatever. That really happened, right? What is it? Is AI clairvoyant, or did someone just program it earlier? Did they know?
Well, you can only look at it one of two ways, in my view. Either AI is completely unreliable, which we've both noticed mistakes. We both talked about it on both of our shows. And we said we've corrected AI over and over again. This particular time, I literally responded. I go, what do you mean that's what they did on the meeting? Today's the 27th. And I have an Australian guy as my AI. And it's like, oh, you're right, mate. My mistake. They haven't done it yet, but the market expects this to happen.
But the market didn't expect that.
Didn't expect it. So today I asked it for the lottery numbers for this weekend, or the Mega Millions and Powerball, and it said, "Well, I can't really tell you the numbers, but
sure you can.
Want to just pick some for fun?" I'm like, "Yeah, pick them. Give me the fun numbers."
Okay. Before we bring on our guests, was there anything that shocked you of the meeting except for when we saw that? Jesus Christ! But anything besides that?
Yeah. The main thing that shocked me was he said December's not a foregone conclusion. Someone needs to tell that to the CME Fed Watch tool. But I'm sure that's changing as we speak, because the CME Fed Watch tool had 4 more cuts being priced in through June of 2026.
While you're introducing the guest, why don't I go on the D sofa and see exactly what it did? You want me to or not?
Yeah, let's bring Jay Soloff. And Jay Soloff is an appropriate guest for this because he's not only a hair club for men, a Tradier fan, but he's also a client. So let's bring Jay in.
Yeah, boys, you got good hair, Jay, first of all. And
a lot more than one of us.
These SOFR futures dropped from 97.01, pricing in 97 almost 3% yields at the end of the year. Now they're pricing in 2.9% yields. 3.1% yields by the end of the year. So it took out a bit of that December cut, which is interesting. The stocks are still hanging in, because I would have thought that stocks would have hated that shit. You, Bobby?
Yeah, I completely agree. I thought, we did see the Russell. The Russell led on the way up, not early, not right off the get. The Russell was actually the only index that was negative when the cash opened. I'm talking about the futures versus the cash. And then when the cash opened, the Russell turned positive on the cash side. The futures turned positive. And then the Russell was the gainer, the biggest gainer on a percentage basis. Just before the Fed meeting, the Russell turned around and went negative, and it was the biggest loser last time I checked on a percentage basis. So that to me says that the market does think it's a Fed thing, because the Russell obviously benefits the most because the lines of credit and things like that benefits the most from lower rates. So yeah, I think that is that. Now, I think tomorrow's meeting is a little bit more important for tech, and there's optimism for tomorrow's meeting. So what do you think, Jay?
Yeah, I think that's the big thing with the cut. I would have expected, or the lack of potential cut in December, I would have expected the market to sell off a bit more. My assumption is it's because they're waiting on the meeting tomorrow, which
Trump and G is the meeting you guys are both talking about. Right?
Yeah.
Trump and G for you people watching. Okay, go on. Yeah.
And it also wouldn't surprise me that if they just come out with kind of what's expected out of a deal between China and the US, if we don't sell the news there also. It's just a lot of running up into this. I saw the chips, at least the AMD and NVIDIA were both way up at the end of today. So I think it's kind of built in now almost. So if the deal underwhelms, or maybe even if it comes in as expected, along with maybe not having a rate cut in December, would not shock me to see a little bit of selling. And so vol was up a little bit. I think the VIX was maybe up into the 17 range last I checked. Yeah, about 17. So a little high, predicting a little bit more than a 1% move per day, which is, moderate. It's certainly not high vol, but it's not low vol either.
Yeah. So Bobby, when we say expectations for the meeting tomorrow, do you have quantifiable expectations, or are you just going to watch the market and think that's disappointment and that's jubilation? What do you do?
I mean, my take is this. I looked at the last bunch of Trump Xi meetings going all the way back to the first term, and they don't end badly. They don't. The results don't end up coming to fruition, though. China was supposed to buy X amount of soybeans. They never did. And you could say Biden didn't enforce it, whatever. They still never did, right? I'm not sure how Trump would have enforced it had he won in 2020. I don't know what the enforcement mechanism is.
It's tariffs in Trump's mind.
I mean, in Trump's mind, he's going to threaten tariffs if they don't buy some immediately. So I think the optimism is probably justified, but similar to the reaction that we got after the Fed decision today, everyone expected the 25 basis points. And then Powell and the rest of the committee in the statement threw in some wrinkles. I think there's probably going to be some wrinkles tomorrow from a perspective of performance of equities. But I could be wrong. I mean, the last bunch of Trump-Xi meetings have ended in, congratulatory backslapping and popping champagne bottles. So I don't know. I'm just skeptical this time, and I don't really know why.
So here to Jay, and you said something that I think is interesting. There might be a buy the rumor, sell the fact thing. And you guys know we talk about this concept all the time. Oftentimes going into a binary, the market is positioned one way for a potential outcome. Then when they get that outcome, they head for the exits. I think that could happen. I've said for the past couple months that I believe the AI trade has entered a bubble phase. I believe that's not a valuable observation because it could go on for another year, 2 years, 3 years, 2 weeks. I did sell out of some things today, bought some puts today before Powell came out. What are you supposed to do with this trade that's obviously being fueled with huge enthusiasm? Are you supposed to be trimming? You're supposed to be loading up? What are you doing?
Is that me or
that's to you, Jay? Unless you don't have an answer, then I'll let
you.
That's
right. That's the question of the year, right? And I agree that we're in bubble territory, but that it could also go on indefinitely. I've actually gotten into vibe coding myself, and it's pretty unbelievable what you can do with AI if you know how to. Right? I think you need to be a subject matter expert because of the hallucinations, but if you can, it's really cool stuff with options in AI that I never would have been able to do before, right? I don't have the programming chops. I don't have a PhD in math, right? Like I'm doing things that now I have to check it through probably a few different AIs to make sure that the math is.
That's what we do. Yeah.
Mm-hmm. But so, I mean, the idea that AI is going to change the world, we're already seeing all these, white collar jobs being cut and replaced. So it's true, but also, right, there's a limited amount of pie to go around, and some of these valuations are crazy. So I like the hedge idea. Like I don't know as much as I'm not like a go to cash sort of person. I'm generally keep my positions on and then put on hedges. So whether those are put spreads or even overall like VIX calls or something like that. I mean, whatever seems to make the most amount of, dollar cents for the individual person, I think.
Bobby, I'm going to throw it to you, but I want to say something real quick because I've never done VIX calls before. I just buy puts in the QQQ or buy Qs and SPYs or in futures. Bobby, what do you think?
Well, that's actually what I was going to ask for Jay. What does make the most sense for you right now? Because for the same thing for me, like I just look at sort of the segment. If I have an individual stock on, for example, like here's a weird one. Right now I own United Health, and not an exciting stock, but where do I hedge that?
Yeah. So it's with AI, I think you're pretty safe hedging with something like QQQ, right? Because it's all very the correlation is there, right? Something like UNH. Yeah, you're probably not going to be able to hedge UNH with QQQ unless we have a crash-like scenario, right? And everything's going down. It doesn't really matter. So, I mean, UNH is one of those things I'd probably buy puts or put spreads in UNH, right? With AI, it's so much more correlated to the general market. But that's what I like about VIX calls in general is you don't necessarily need stocks to go down there. I mean, volatility will start to go up a lot of times before stocks go down. So, if you can roll up your hedges for if you need to, and you have a little bit of time to kind of decide what you want to do there. But they also could be super expensive too. So it's, again, a lot of times it's situational.
So UNH, Jay, was probably a bad example. I'm also long Microsoft. Okay. And Microsoft actually gapped open a day or two ago through my extended target. So just to give you some background, if a stock moves from 10 to 100, I buy at 30 and I sell at 70, right? I like to take sections of moves. I don't try to buy the low and sell the high, contrary to the cliche that we all grew up with that we all know is now wrong. From a perspective of a stock like that, what is the way that I do risk management is with position size. So oftentimes I don't have 100 shares, right? Is that when you tell people to do maybe a smaller position in the Qs or go into the futures, or somebody said to you, hey, I own 75 shares of Microsoft, I want to hedge it. What would you say?
Yeah, I mean, now keep in mind that most of my life is in the options world. So I don't answer a lot of questions about equity in general, but I still think it's perfectly reasonable, right, to hedge 70, whatever. I mean, even if it's 20 shares, right? I mean, you could just
do a narrow put spread.
Do a put spread, do a cheap out of the money, right? If you don't have as much risk, right? What's your downside risk with 75 shares? Well, obviously it still could be substantial, but
sure,
it's not like owning 2,000 shares, right? So you can spend, $100 on a 1 month out of the money put just in case it falls off a cliff or whatever it might be, right? I mean, I usually tell people just to change the risk and what options they're using. So yeah, as Jim said, narrow put spread, out of the money put spread, out of the money put, right? Or a collar, sell a call to finance your put, whatever it might be, right? There's a whole bunch of ways to do it, and it kind of depends on the pricing for each equity. But I don't do a whole lot of position sizing stuff just because it's not really part of my day to day. Although I know it's extremely valuable. It's probably something I should spend a little more time on personally.
But Bobby, can I answer that too? Because you have to remember that even an at the money put, a couple of weeks out has as much as as high as a 50 delta, which is still isn't. You know what I mean? Isn't the 75 that you own. Right. So it's 50 shares. And then you can make that even a lower delta, buy that put, sell a 20 put. Now you have 30 shares, 30 shares hedged. So I don't think it's that difficult an equation. And again, if you want, I'll give you guys Bobby and Jay's personal home phone number, and you guys can call them anytime you want, anytime, night or day, and they'll answer that question. Bobby.
Yeah, no, that takes me to my next area that I wanted to ask you about. What do you see in the current markets? I think everybody believes that this market is stretched, right? What do you think the driver is? And what do you think the driver to sort of bring things back to what the three of us might call more fair valuation for stocks overall?
Yeah, that's an excellent question. I've been thinking a lot about that, right? I mean, I think a lot of people who spend time in the markets kind of agree that valuations are extremely stretched. I mean, some of the stuff is pretty ridiculous. You look at things that I like the modular reactors. I think that's a big part of the future. But I mean, last time I looked at, I started trading, I was selling puts in Oklo when it was like 20, and I think it's like 140. And it's like a $20 billion stock that I'm not sure they've actually sold anything. That doesn't say. I mean, I think it's an incredible company, but how some of these valuations are just insane. Usually, when that happens, right, when you look at whatever quantum, you start looking at stuff that just kind of goes up purely on vibe, right? My son's 16. He came to me and said he met someone in his school that is doing something where they just put a little bit amount of money and then it goes up, but it expires in a certain amount of time. And I'm like,
0 days to expiration.
I'm like, dude, you're talking about options. That's what I do for a living. And if someone in your school is doing it, then we're probably getting, he's like, I want to open a Robinhood account and do this and make money. And I'm like, all right. So if, the teenagers are gambling with options, we're probably pretty near the top, but it just, this has happened so many times where we could still see this for we can see
let
this
me
for 2
let me
years,
put a finer
right?
point on that too, Jay. Just to put it in perspective, at the height of the internet bubble, the NASDAQ traded at 200 times earnings. Okay. We're only at the high 30s right now. That's stretched by historical standard, but it is not, it is way, way less than we can get a lot more stretched. And one of the key differences, well, here, obviously, and that shows up in the PE, is that these companies that we're talking about make a shit ton, and that's a highly sophisticated financial term, a shit ton of money. Whereas back in the .com thing, all they had that was of value was .com at the end of their name, and they weren't making money.
Right.
So yeah, so I say we are in a bubble. I hedge. I will continue hedging. Like even I had for AMD, you guys know this because I talked about it on the show. About 5 weeks ago, I put on a sell 3 calls, buy 5 calls above it. And where I thought resistance was, it shot through. Now I'm long AMD, but I'm going to get out of some of that. It was in a tax deferred account, luckily, because I hate paying taxes. And then I'll replicate that position with a smaller delta, just a call spread. Take little pieces of it. Don't be a greedy pig. You like it, Jay?
Yeah, absolutely. I find the hardest thing that when people ask me, all kinds of subscribers in various products and when should I take profits on this? When should I take profits? And I'm like, it's such a hard question to answer, right? I mean, like Bob said earlier, like you can't time the top. And so that's the one thing. I mean, there's been a lot of, this is it might open a different subject, but it's one of the reasons I'm a big fan of these derivative income ETFs. They get a lot of heat. And for good reason, but one thing that they do, most of them gone to paying weekly distributions now. It kind of forces you to take money off the table on a regular basis, and I feel like that helps a lot of my people out, right? Like they don't have to decide, well, should I get in or out? Well, you're taking money off the table. You can put it back in if you want to. You can put it into whatever, a savings account, right? Or you can pay utility bills with it. Doesn't matter, right? That's beyond the scope of what I'm going to tell them what to do with it. But they have that choice now every week or every month to take this money off the table. And if it's going up, it's all profits, right? If it's going down, it's return of capital, but whatever. I mean, I like that aspect of it. I think that really helps people who don't have discipline, including myself. Right?
So let's go into those then. What do you like? Like Jeppy is one that I'm aware of. What are the ones that you like? What are the characteristics of the ones that you like? Now, what are the risks for people who don't understand them?
Yeah, the big risk with these is that everyone sees the yield and they don't realize that all that really matters is total return. So it doesn't matter if Nvidia has a distribution of 100% if the stock is going straight down, right? You're still losing money. So you're just getting your capital returned to you, and it's not and I don't get into too much of the taxes, but it's definitely not the most tax advantage way to handle that sort of thing. So the the single stock ETFs that do this are very tactical, right? You use, you're not buying whole products. They're just like any of these leverage ETFs. If you have an opinion, a strong opinion, you're a directional trader. You can be a volatility trader, and these are easy ways to do that. But some of the interesting things are really, they're getting into the structured product side and putting them in ETF wrappers. That's what I think very interested in, like having these auto callables in ETF wrappers, because these are things that retail's never been able to touch. You couldn't do them without $100,000, $1 million. They're always OTC. And now you can get some of these, Simplify has Calamos, Innovator, and then Granite Shares just filed for about 30 of these, right? You have this ability to have these barrier options where, you'll get paid 15, 20% annualized as long as the stock doesn't go below 30% down and stay there, Right. And then they ladder them. So, there's not as much risk. To me, that's one of the safer ways to get 15 or 20%, maybe the safest way to get 15 or 20%, which is a lot, right? I mean, most of the time that's going to beat just buy and hold, most years. Right. So that's the stuff I think that is pretty fascinating. It'll be interesting to see how that starts to play out.
Bobby, that product you said, Jebi, or what did you say? Can you describe what that?
Excuse me, it's JEPI.
And what does it do?
It's JP Morgan Equity Premium Income ETF.
So, and what that whole conversation, by the way, and I could fancy myself as not an idiot, and I was having a difficult time following Bobby. So what does it do exactly?
So basically it buys S&P 500 stocks and then sells covered calls.
Okay. That's interesting.
So
that's
income generating while it's still, it got beat up the last 2 days pretty bad on a price basis. Right.
Yeah.
But there's a trailing yield to it. And it's one of the lower expense ratio ones. I think the Goldman Sachs one's a little bit lower.
There's a company called Claymore who probably about 20 years ago, maybe a little bit more, I met with them to talk about picking particularly high yielding stocks, selling calls against it to enhance the yield, and packaging an ETF form. They said, "Oh no, it's impossible to do. It can't. It could never be approved." Literally, like 6 months later, they announced they were doing it. I'm not saying they got the idea from me, but I'm like, Jesus, if they did, these guys are a bunch of assholes. But anyway, Bobby.
Well, I'm pretty sure Open Table got their idea from me. I just don't know how they got it from me. Yeah, I'll tell that story if you guys are interested in another off the air. So let's go back to sort of the general markets, Jay, if we could.
Mm-hmm.
What do you take from today's Fed meeting? I know that we're doing this show, only 2.5 hours after the press conference. That actually matters. Jim and I have been of the opinion that this is probably, Jim, correct me if I'm wrong on this. I think you said this as well. We don't really understand a series of rate cuts right now. Where do you fall in that?
Yeah, well, and now we haven't, how long has it been since we haven't had any data? So that certainly makes it harder. But I still think I'm of the belief that the biggest concern right now is still inflation. Now, I'm starting to, a lot anecdotally, and the job market is tough. I know a lot of people who are, for various reasons, looking for jobs, either got laid off or they're looking for something better, and it's been brutal, right? Now that's total, and I'm in Arizona, and it's different. I'm talking mostly local stuff, but
like scorpions and shit.
The scorpions take the jobs, and I mean it's
deport all those scorpions.
I would have zero problems with that. Have the ice gather up all the scorpions. I'm all for that. But yeah, I still think inflation's a concern. I actually teach microeconomics at a local college, and I hate tariffs, right? It's as an economist, I just think they're a bad tool to use, right? And I think that they are, and that's purely, not political. That's my belief, just economically speaking. I don't think they're
I'd say it's ours too, economically, as free traders, but
we're absolutely free traders. But I will add, by the way, that the whole time I've been saying, if Trump can somehow make this work, which I don't have a high confidence level, but I will be the first to say, okay, you were right. China gave us a much better trade deal because you threatened those stupid tariffs. But I, again, as a free trader, as a Friedman, Hayek, Smith, whatever, Mises, economist, whatever, I say no to that shit. But I didn't mean to interrupt you. Sorry, Jay.
No, that's fine. Yeah, no, and it's I mean, if the end result gets there, I mean, I will say also, hey, I surprised, but he got it done. I still don't like the method, right? And I still think that over the short term, inflation that one of the reasons is, we haven't even really truly seen the impact. There's a pretty big lag in the impact of tariffs and prices, and but I think that we're still going to see some higher numbers on the inflation side that are going to be more of a concern than the employment numbers, right? I think employment is a longer term thing that we need to worry about. And so I do think that the rate cuts were I'm fine with a couple quarter point rate cuts, but spreading those out a little bit from forward, I think probably makes the most amount of sense, particularly since we don't have data. Right?
Bobby, Yeah, I have a question for you because my
For me?
opinion on this is evolving. You know, in a situation where what was that stupid stock Beyond Meat, which is just makes me want to throw up even hearing the name Beyond Meat, rallies 250% the other day. That to me still suggests that there's excess liquidity in the system, which would not be a good environment for rate cuts. However, I think that Jay Powell, like me, has an element of being terrified of the job destruction that AI is increasing exponentially. AI uptake to me looks like a gamma curve in stocks. You know, it's shooting up high, and to me, it's pretty amazing. And I think that Jay Powell's a little scared of that, and thinks that could be disinflationary and could be trying to get ahead of the curve. Do you think I'm crazy first, Bobby, or no?
No, I don't think you're crazy. I think you're giving Powell a lot of credit that he may or may not deserve.
Right. I don't think he's quite. I don't think he
I'll
could
say
hang
that.
with this conversation. But yeah,
I'll say this: Torsten Slok. You guys have heard of Torsten Slok,
Sure.
right? Does a lot of interviews on Bloomberg. I think he's with Apollo
Yep.
right now. He said something I thought was interesting. The last jobs number we got, 14,000 jobs, I think.
something like that.
That averages to 56,000 jobs a month. The Fed just came out with a report that said in the new economy, the equilibrium for jobs added is 30,000. Based on that, we're way ahead of what the new equilibrium is. Now, politically, I don't know if that flies, right? Politically, I don't know if 50, 60,000 jobs a month flies. But again, in just basic like structural mathematical economics, if the Fed study is anywhere near correct, we're outperforming on jobs. Now we're cutting rates into what is at least a stable job market and an inflation rate somewhere between, I think everybody agrees, somewhere between 2.5% and 3.1%. So I'm a little skeptical that he may be ahead of the curve on something that's probably going to take fewer years than I think to achieve. I don't know, Jay, what do you think?
Yeah, I had a weird vision there while you were talking of what the hell is everybody going to do when AI takes all the jobs? But so I got kind of distracted thinking about what jobs are people going to have here. But yeah, I mean, I think that makes a lot of sense. What you're saying about the equilibrium, that number should probably continue to go down, and I think that's a scary proposition, right?
Because of immigration, correct?
Well,
No, you're
immigration. I mean, immigration certainly is part of it, but I mean, I still the AI. I mean,
you're just saying just AI's effect. I get what you're saying. Yeah.
Yeah, no, I mean, immigration as well, right? I mean, if less, I mean,
because Jim Bianco gave that exact 30,000 number like 3-4 months ago when he
That's where
put
the
out.
Fed got it.
Say what's that?
That's where the Fed got it.
Hell yeah, it's where they got it.
They didn't do any work.
Yeah, they follow Jim. They follow Jim Bianco on Twitter just like the rest of us. And I'm not even joking, by the way. They do. They know they're out of their depth on occasion, and that was his. He surmised that many months ago, and I think it probably has a lot of validity, Bob.
Yeah, and it's it's going to be interesting because there are some things that are not going to be replaced for quite a while, right? Like I don't see, like Amazon's hiring how many? I mean, they're getting rid of a bunch of
30,000. Yeah,
but then they're hiring what 250,000. Yeah, so they're getting rid of 10,000 white collar, 30,000 white collar jobs, but they're hiring 250,000 seasonal employees. I mean, I don't see that stuff like that changing anytime soon, right? That's the infrastructure and capital required to replace all those sorts of jobs. So, that's kind of a microcosm, I think, for what's going to be happening. So, yeah. Anyway, so we were talking about employment.
We take a quick time out here at this part of the show, half hour. And Luis, can you put up the banner? This is the time where we ask a favor of you. By the way, Jay uses this product, or last we talked to him, is one of the people who are expert options traders use Tradier Pro. We are offering it to you for 3 months for free. All you have to do is scan the code. We've talked to guys like Jay who've been trading options for decades, guys who've been trading options for weeks. They all say the same thing. It's intuitive. It is a great platform. We would appreciate it if you guys gave it a try at no obligation to you. Just scan the code. Jay, you want to add anything about Tradier Pro?
A lot of my subscribers use Tradier and speak very highly of it. I use it certainly, like particularly for analysis, there's some fantastic options analysis as part of if you're in the options side of stuff, there's invaluable stuff in there.
Perfect. Thank you guys for helping us out, and please scan that code. Bobby, you're up.
Yeah, I want to point something out really quick. First of all, Jay, we didn't tell people where you're from and how people can get a hold of you. So
Good
let's do
point.
that
Yes,
at the
yes.
middle of the show so we don't forget later.
Hey everyone, I'm Jay Soloff. I do mostly option stuff, but also ETFs. Investors Alley and NetPicks are the companies. And if you want to take microeconomics from me, you can go to Park University in Gilbert. And if you're a student athlete, that's pretty much what that school is for. So, but So
can I say something to you about Arizona real quickly? Every time I talk to someone from Arizona, because, okay, without my water from my property in Colorado, you guys would all be dead there. So I want you to be alive and doing well. And I love the town of Gilbert. I just want to thank you every once in a while for me sending every bit of water from my land in Colorado down that Colorado River so you guys can grow green grass in Arizona. Is that too much to ask or no?
I don't have any grass on my property. I'm 100% xeriscape, all rock. So
oh, good. Okay,
I'm
good.
not part of the problem.
You are not part of the problem. Should those other people be thanking me? I kind of think they should. Yeah, particularly the golfers.
Yes, the golfers 100% should be thanking you. They should be sending you some kind of tax on water.
My lake, the lake that's so the Colorado River starts out at Grand Lake, but then it empties into Lake Granby, which is this enormous reservoir that's about 5 minutes from my house. And it is currently now the water is like a mile further away than it was like even 10 years ago, just because we keep running that off. So there's always big fights about that in Colorado. Do we keep our water? Do we keep sending it out west? Anyway, off topic. Bobby, what assets do you want to go into now?
No, I just want to touch one more thing on this AI thing. I think one of the things that is troubling for a lot of people about AI is they don't know what the competition to it is. They know that obviously just physical labor is, right?
Sure.
But it's not like the conversation. I remember a while back, I looked up what people said about horse and carriages when the automobile was coming around, right? And the most famous one comes from a guy at a local bank who I can't remember who he was or what bank, but he was telling someone not to invest in Henry Ford. And he's basically saying the automobile is a fad. The horse and carriage is here to stay. Another one was the cost of cars. They're going to break down. You need fuel, you need oil, you need tires.
He was right about that.
Well, $300 and a horse lasts 10 years with a good team of horses for $300. Horses bolt and the site. I'm just looking at some of them up here now. Anyway, from a perspective of AI now, there's that cadre of people that say we don't know what jobs are going to be created by the efficiencies of AI. Number one, do either one of you know, or I shouldn't say you don't know, have any idea what that could be going forward? And number two, Jay, are you done with the chip stocks at this point when you're looking at things? Or, there's a lot of people talk about, I'd rather invest in the picks and shovels of AI. I don't really know what those are.
So for me, I'll answer that first because I don't, like with every other technology in my lifetime, I've never been one of these guys that says, oh, it's going to eliminate jobs, because I always think it creates every bit more than it eliminates. And usually those jobs are better. Almost exclusively those jobs are better. I don't see how that's happening this time. I think it's anytime someone is the designer of AI, they're literally designing it to take that job that the designer just did. So I have no freaking clue what the jobs that AI are going to create, except for more plumbers, which the AI isn't directly creating that, obviously. But maybe we get to a point where, and maybe these last 40, 50 years where everybody works with their head and not their hands wasn't the greatest thing for our psychological condition anyway. Maybe we get more to the fact where we live better. AI solves some of our problems, but we're working more building things. And I guess that's dumb. Even hearing myself saying it, it's dumb, but there's some threads of that might be some truth to it. Yes, Jay?
Yeah, I struggle with this a lot because there's not many, in theory, right? If you've particularly if you watch enough sci-fi, you figure that AI should be able to get to be at the point where it can build things more efficiently and do things. I mean, already like the driverless car statistics are way better in terms of
That's why
accident.
I own Google and Tesla both, because I think driverless cars are a huge thing, positive for us. We are shitty drivers as human
We're terrible
beings.
drivers. Yeah.
One person dies every 12 minutes in a car accident in this country. I didn't.
There's just going to be more people alive that need jobs, though.
That's what I worry
ahead.
about.
It's not like Bill Gates now. Let's give him. Let's. Well, whatever.
That's 100% what I worry about. I mean, is this going to happen overnight? Where, both. I mean, yes, already. Like my understanding is that at Arizona State, computer science is a pretty big. That's where I went to grad school, and it's close by. They have a really popular computer science program, a highly regarded one, and I think there are people coming in basically saying you're not going to have a job, like change your major, right? Basically from the business community, that's already pretty much there, right? I can program extremely complex stuff as long as you understand the subject matter. You have to work with AI on the subject matter, but the programming part is fine. If it makes mistakes, eventually it'll figure it out. That's been my experience with it, right? But yeah, so we're talking about, so that stuff's pretty much almost already there. What about things like driving? I think we're close. Building buildings, or doing plumbing, right? Like some things are going to take longer, other things are not. But I mean, are there really any jobs that aren't really? I mean, there are some people who are going to want human touch for certain things, right? I mean, you probably want to go to a human first. I don't know.
Massage parlors,
I don't know, but
that's right.
Yeah. I don't know. It's just like everything could be on. It's hard.
If any of you guys watching can think of where the jobs are going to be created with this AI move, please tell us. Because I'm at the tail end of my career, but I have kids and hopefully grandkids who are not, and I want to know what the hell they're going to do. But let's bring this show back to markets and investing. Okay, you go, Bob.
Well, Luis, I've neglected the questions and comments, and I'd like to go rapid fire if we could. We only have one real question. Most of these are comments. So Luis, if you're able to start from Remo saying good afternoon, because Remo is into house. By the way, Remo and I exchanged car talk and pictures. He's an old gearhead. I love talking to guys like that. That Hash Over Cash said, "Have you said thank you once?" That's from Jim. He's quoting you, I think.
Yeah, no, I say thank you all the time. What are you implying? What is a Hash Over Cash? I'm gratitude.
Remo again said NVIDIA has nearly a 10% weighting. That looks like in the S&P. It's larger than the NASDAQ, I think.
Yeah, it is definitely.
And actually, I was watching Mike Green talk about the inevitability of these stocks becoming a bubble because of cap-weighted indexes. When somebody's putting $100 into the Qs, they're putting like $80 of that into NVIDIA. I mean, I'm exaggerating, obviously, but
yeah.
And then Remo said I could hedge United Healthcare with RXD. He actually threw a chart up in Twitter, and I will take a look at that. But I need more data than what you just gave me, Mr. Charts. Then he said he's been in BTGD for 2025. I don't know what that is. Anybody know what that is?
I don't. I can look it up.
I don't from symbol, if you don't mind, Jimmy.
BTGD.
And then there's a question from Tim to Jay. UBS announced 48,000 in job cuts, 34,000 in operations roles due to reduced package volume. Does Jay think this is a sign of a slowdown in the U.S. economy? What do you think, Jay?
Yeah, I mean, that's got to be directly related to tariffs. I think so. It's probably more situational, but it's hard to separate that out. It wouldn't surprise me if a slowdown is part of that, but I mean, there's just, there's a lot of stuff in the shipping industry that has been really hit hard by the tariff situation. So I think we'll see that increase. Well, obviously if a trade deal occurs, but also, I mean, just with the holidays coming up, that's gonna reverse there to some extent. So that's a good point though. Those numbers are, shipping numbers are obviously one of the things you want to look. It's like kind of like copper prices, right? I mean, nice leading indicator at times of the economy.
By the way, you guys want to know what BTGD is?
What is it?
It's leverage 100% Bitcoin, 100% gold ETF. No.
No, oh my God.
No.
Are you kidding me?
Yeah. Who was that? Timmy who
Wow.
said he's in it?
He said he's in it. That's what he said.
And in it, I mean, certainly he doesn't mean in it 100%. I mean, to have something in that is interesting to me, but to have any sort of huge allocation to that would scare the absolute crap out of me. Yeah. By the way, gold's a volatile asset now, to be clear, Bobby.
Yeah, it is. So just real quick, Remo again said the average cost of the new cars 2025 is now 50 grand. I'm going to go to Widge now, but then Tim put a funny comment and he said, Tim is not in BGTD. Tim, before the show's over, you told me a while back you were going to buy $10,000 worth of Bitcoin. I don't know if you ever did. We haven't talked about it. Widge put in a good comment that may actually deflect from Tim's question. Amazon delivery drivers have replaced UPS drivers here over the past couple of years. Is it a lateral move? I mean,
I like it. I've been wondering that forever because it's definitely.
I don't think either one of us know, right?
It's symmetry, though. They had all the lines. I've been asking this for 5 years. My wife, every time we go on a walk and we see the Amazon trucks, I'm like, why don't they take over just strict package delivery? Apparently, they are now. Says bitch. They have the drivers. They have the routes. It seems like a lock.
Mm-hmm. So that's an excellent point there too. That UPS is also there's probably a lot of that stuff just being replaced by Amazon. That's actually a really good point. I bet that wouldn't even surprise me if that's the number one factor there.
Yeah, I like it, Widge. Thank you.
Yeah, it's something to look into. Widge is always giving us good comments. What do you guys think about? I was talking to Mike McGlone today, and Jay, I don't really know your stance on this, but Mike's stance on Bitcoin was that it's a legitimate asset, but it's blown out in terms of upside. And he said he was at a conference last year. I'm actually going to be on a panel with him next week on Thursday, down here in Naples, actually, Naples Wealth Symposium. But he said that he told guys that he had sold all his Bitcoin, and the entire crowd was like, "Oh, I feel bad for you. You're crazy." He said, "But of course, I didn't tell them that I shifted it into gold, right? Out of Bitcoin into gold." And he said, that's what a lot of people who are not traders like the three of us, they don't understand, is that you don't have to sell something and just go to cash. So first of all, Jay, I don't know your stance on Bitcoin. Do you think it's a real asset or not? Do you think it can go to zero, et cetera? All the typical questions. And then where are you with the price action now if you do consider it an asset?
There's probably enough assets in it now that you kind of have to call it an asset class. But so you're talking to a guy that has trouble investing in gold because there's no cash flow, right?
Yeah.
The only thing that now what Bitcoin has done for me is made gold a real asset class. Right? Because like gold we know has been around for 5,000 years as a store of value, right? So, I guess what legitimizes gold is you have central banks that buy gold and things like that, right? That's kind of the legit aspect of it. But I've always been, and I like trading commodities, but I've always been someone who thinks something needs to have a cash flow to be an investment, right? But that being said, I certainly understand. I mean, I do play around with commodities and certainly, but I would rather have a gold miner or something like that. So when you start getting into crypto and you don't have, it hasn't been around long enough to really be considered a store of value. It doesn't really have a use. I mean, there's people that argue it, but I mean, for a while there at the beginning, you were seeing, oh, we accept Bitcoin, but now you don't even see that anymore, right? The whole, oh, let's see if stores will accept Bitcoin. That's not what it is anymore. Right. People just bet on crypto, just like it's purely directional trading. So I like to trade it because it moves and the options are liquid, but I don't think I'm going to hold it anytime soon, if ever, right? It's going to take a long time. I don't even, really do much with currencies. Like I said, commodities for me are more fun. I mean, things like oil and gold, obviously, big things to trade, particularly with options. But yeah, I don't know. I'm probably not the right guy to really talk about crypto just based on my background.
No, I like that. And that actually brings a whole nother sort of a theoretical question. So, and Jim has heard me say this a million times. My stance has always been that if you have a view on a commodity, you should be in that commodity. That comes from, CNBC asking me which energy names I liked when I told them I thought oil was going to go higher. They'd say, okay, which names do you like? I'm like, no, I'm buying oil. I'm not buying an oil name. So where does that sit in your brain when you're switching stuff around? You're like, oh, well, I don't want to really buy gold because it doesn't have income. But gold miners also don't have like CEO scandals or explosions or in the mine or, I was just going to get graphic. They don't have problems like missing estimates or other things that can happen with companies versus an actual commodity. So is it because of your options background, you're able to play options better there, or what is it?
Yeah. I mean, that's what I love about, but that's another thing that I really like about some of these derivative income stuff. You can get like covered call stocks on whatever physical gold or gold futures or whatever it might be. So now you have that gold exposure and you're getting an income component or a cash flow, not income, but so like a cash flow component to it, which I really like. I'm a big fan of that. I mean, and that's to say, like, my first job was working for the Kansas City Board of Trade in the wheat pit, right? So commodities they're in my blood. Maybe it's just that I'm not very good at trading them. But I have opinions on oil, natural gas, gold, stuff, and silver. I mean, I talk about that stuff all the time with my subscribers, but then it's usually like, okay, how can we use, where's the volatility? How can we use this via options, right? So, in my retirement account, though, I look at it and, I don't really see anything that's, I do actually know that's true. I have a put selling ETF on oil. So I am doing so I agree that oil's going up, but because of the volatility, what was going on, in the Middle East and stuff like that, I was trying to take advantage of the volatility of that as well. So so that's kind of a long answer to your question.
Bobby, can I take a stab at the Bitcoin one?
Yeah, please.
Because every day it changes. Every day it's a little bit more of a rooted technology. And when you look at governments around the world, particularly the biggest government, our government being a big proponent of cryptocurrencies, each week, each month that passes, it becomes harder to uproot. And so I think it's at a point right now, we're getting rid of Bitcoin, like the whatever base case for it going to zero becomes less and less likely. Now, keep in mind, I never intended to have more than 2 to 3% of my net in Bitcoin. It's probably a little bit more than that just because of how the meteoric rise that it's had. And I'm not buying it anymore. Remember? Oh, by the way, I've been telling you guys for years and years, guys watching, that every Wednesday I have an allocation that buys cryptos. I stopped all that just because I had like 5% of my net worth in cryptocurrencies, which is not what I intended to do. But I think it's foolish to have none and it's foolish to have 20%. Bobby?
I'm going to go into this conversation a little bit more because I'm obviously very interested in this because I just did a crypto podcast that they released last week. And I'm going to be moderating a panel at basically a crypto wealth conference down here in Naples. It's actually not a crypto panel, Jim. I just found out it's a macroeconomic panel, which I'm much more excited about. But I looked at after Jay said, because I agree, you don't hear about companies accepting Bitcoin anymore, right? So I'm going to bounce this off Jay and then Jimmy, you. What I said to the guy that interviewed me was, you're basically backed by fiat because there is no place where you can say you can buy this car for this many Bitcoin without dollars involved, right? The dollar's still always involved in the conversation, the fiat currency that we all really dislike at its core, right? Jay, you as an economist and Jimmy and I just being angry guys. So Microsoft accepts Bitcoin, but through their BitPay app and its store credit can actually buy something the way I'm reading this here. AT&T direct payments for phone bills, but via an app called BitPay. Overstock, direct for furniture, home goods, electronics, via Coinbase Commerce, right? So still you can't go in with your cold wallet and buy something. AMC Theaters, and this is to your point, Jimmy. AMC Theaters, direct for movie tickets, concessions via their app. Starbucks, indirectly via the backed app, Whole Foods. It goes on and on. There's always a sort of a middleman that converts it to dollars for the end user. Now, Jim,
it's a tax. It has tax implications no matter what. Okay,
it does, because there's a middleman. But
there's a middleman. Yeah, so I sold my Bitcoin
to what you said, Jimmy. You said it's going to get harder and harder to uproot. I have a theory, Jay, and I'd like to hear your comment on this first. I think I've said this to Jimmy already. The next party in power, which there's only two, they've gone after the Trump family every way they can. You could say it's justified or not justified. Is it possible that if the other party takes power, they go after crypto, considering how entrenched crypto is now to the wealth of the Trump family or organization? Would you see that as a possible way that Bitcoin could not get uprooted, Jim? I mean, AMC still exists, but the stock's $2.66. They're not uprooted. They're just not worth a whole hell of a lot. So do either one of you guys see that as a possibility, or now am I crazy? Jay, you first.
No, I don't think so. I mean, and honestly, I think because they're bigger fish to fry, right? If Democrats get power, I mean, there's going to be so many things. I think the last thing they're going to worry about is crypto, right? Mm-hmm. Right. I mean, there's all the, there's tariffs, there's ICE, healthcare's crazy right now. I mean, there's so many things. I think, sure. I for the most part, yes, you have some pretty big name, scandals, fraud, whatever going on, but how much is it actually damaging society? And I don't, in terms of the fraud aspect of it, it's hard to quantify. Yeah, I'm sure there's people, there's plenty of people launching coins and then selling them. And I mean, but how's that any different than what was going on with pennies, with pump and dumps with penny stocks been going on since the beginning of time, right? I just don't think that it's a big enough issue for either party to really go on it. And also the big banks have, for the most part, right, they've adopted it. I mean, it's not, I don't know how big, let's say, the crypto department is at Goldman Sachs or whatever, right? But I'm sure they have something, right? And once the banks have that, it's probably here to stay.
I just know that I can't go to Bank of America and Wells Fargo and say I want my interest in crypto. That's not. Jimmy, what do you think?
Yeah, I don't like to be 100% in disagreeing with you, but this is a case that I am, and I'll tell you why.
Okay.
When I spoke at that crypto conference in Austin a year and a half ago, and after my speech, I sat in a crowd, and the person on stage, and there's probably 1,000 people in the crowd, and they said, "How many of you people put Bitcoin or cryptocurrency as your number one voting issue?" 999 hands went up. Mine was the only one that did not. So my point is this: is that if this would be political suicide for the next administration to come in and say, because we want to get Trump, we're going to try to put a kibosh on all these things and drive them into the dirt. They'd also be driving, 10 million people are Bitcoin enthusiasts in this country. Probably another 30 million are Bitcoin minimalists like me and you. I think that they'd be crushing people and taking money out of their pockets, and those voters would be gone for good after taking that shot to the nards. That's what I think. Yeah. Now,
there's a question from Tim, Jimmy. I'm sorry. Sure. Do you mind if I ask this?
Not at all. That'd be the last one then.
Last one from Tim. As the AI stocks move higher, it's clear they're going to need a ton of energy. Why haven't the energy stocks responded other than uranium?
Jimmy, I'm in uranium, as you know. I bought UEC, NLR, bought them about a year ago. That's what I thought was going to happen. I don't know about the other ones, just because I think the market's looking and saying, what's really going to be the only solution to this? And the only solution is nuclear. Then Trump comes out and says, well, I'm going to let Bobby, I wish I could do your voice, but I'm going to try. Imagine this in Bobby's good Trump impersonation. I'm going to let these individual companies make I suck at it, make their own nuclear reactors. The permitting process is going to be quick. I think nuclear is still the play. Jay?
Yeah, I think nuclear is a long-term solution. I think.
You think it's the only solution, correct?
Well, I think no. I mean, there are some of these small. I was reading about the small localized natural gas facilities that are probably. Obviously, we have a crap ton. We'll use the technical term of natural gas out there. So, obviously, not nearly as efficient as uranium, but could possibly fill the gap while we're getting the technology where it needs to be. But yeah, I'm 100%. I mean, I love the modular nuclear reactors. I think that's
right. I figured you said that before. I figured you'd be on board.
Yeah.
And again, people, you can get natural gas real cheap, like you can every other year, because it's like, what is it? It's still in the dumps, right, Bobby?
Yeah, it is.
Yeah.
Can I just do it? I just like doing it.
Do it. Please do.
We have a plan for nuclear. We think it's going to be great. It's a great plan. Everyone says it's the best plan they've ever seen. I talked to people. They said it. It's a great plan. We're going to let the companies. That's it. I'm done.
That's good. It's actually getting better. It's evolving.
It's really good.
Yeah.
It's really good.
Not bad at all.
Honestly, guys, Shane Gillis did the funniest thing ever before the 2024 election. They were trying to keep Trump off the debate stage. And he said, I think that they should just bring him out, like the guy from Silence of the Lambs, the thing on his face, wheel him out all in a straitjacket, bring him onto the main stage. Then they take the thing off and he goes, they're both gay.
Right. That Shane Gillis bit is hysterical. Bobby, do you ever go like today? I decided this morning I couldn't exercise. I've been coaching the girls at night and I work out with them and I work out my normal workout in the morning. I was just hurting. Do you ever go a day and don't do any exercise at all?
I do. Yeah.
Actually,
I'll take a week, Jimmy. I'll do a whole week.
God, I hate
take a week off and just beat.
Yeah, no, I can't do it. I hate it.
It's difficult mentally. It is.
I know. It's difficult for me.
Jay,
how are things in Gilbert? I love that town, by the way. Gilbert is so cool, a little town. I really love it. Yeah.
They've really built it up here. We moved here in 2007 and there's still a lot of farmland, right? So I'm in a great location because I built where there's nothing around me. And now there's, bars and restaurants. And
you can walk into the downtown area?
I teach. That's where I teach, actually, in the downtown area. But no, I'm about 15 minutes from that. But I'm over here. There's a place called Epicenter that's got all this cool stuff, and Santan Mall's over by me. And they just keep building more cool things.
Oh yeah, it's a cool little area. I love it. It feels very westerny too. All right, I'm gonna go out. I gotta do Sean Thompson. Sean Thompson, Bobby. He has a radio show.
I don't know him, no.
He was a floor trader too, and now he has a radio show on Salem Radio, and he's quite good.
So, I know Sean.
Yeah, I'm his guest tonight, so I got to.
Sean lives down here.
Yeah, he lives in Floyd, Naples, right? Exactly.
Yeah, I know him really well.
I'll talk to him about you. Get you on that show too. Yeah.
What's that?
I'll get you on that show too, because I like doing his show. He's crazy, but I like him.
Yeah, he is great. Yeah, tell him I said hello. We know each other very well.
I will for sure. Thank you so much, Jay. These guys can find you on Twitter at Jay Soloff, correct?
Yep.
So at J, just the letter.
Just the letter. Yes.
Thank you for joining us. This is Tradier's The Trader's Edge. Please join Bobby and I and Mike Arnold, our chief strategist at unfilteredinvestor.com. We take some of the things we talk about here, break them down into tradable things. Tradable things. Is that what I said? Bobby, we got to write copy for me. I don't know how to just improv this shit. Anyway, thank you for joining us on The Trader's Edge.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.